sponsored by the Securities and Exchange Commission of Nigeria.
The last few years have heralded the emergence of Nigeria's capital market as a major investment destination for investors searching for yield and value across the world. In 2012, strong demand saw Nigeria's stock market rise 45%, making it the third best performer on the African continent. Likewise, some bond prices rose 20% in 2012 as foreign investors searching for attractive yields in a stable currency poured in the cash. The stellar performance is on the back of far-reaching reforms across the capital market. The new management of the Nigerian Stock Exchange has led a reform program that appears to be improving investors' confidence. Reforms traced back to 2006 set the stage for the growing interest we are seeing in the bond market today. But as the equity and bond market continue to attract more interest from investors, we ask, what are the reforms and innovations that will define the market in 2013 and beyond?
Mergers and acquisitions will be key this year. A number of foreign investors are looking to enter this market, whether it be in fast-moving consumer goods or in other sectors. So what we will see is corporate restructurings and more focus on mergers and acquisitions. There are a number of innovations from last year which will of course drive the markets this year. Clearly, the market-making, securities lending, short-selling agenda should bring liquidity to the markets, should enable investors be able to earn an extra income from securities lending.
In any market, liquidity is very important, and one of the things securities lending brings to the table is increased liquidity. With increased liquidity is increased trading, increased market depth. So we welcome the securities lending framework. It's still being fine-tuned, but we believe it's a very big step in the development of the market, especially as market making is now going on in the market, both on the equity side and very soon on the fixed income side. We're seeing an increasing focus on collective investment schemes, and we expect this to drive the investment management industry in the short to medium term. And if you're talking about the enablers, we can dimension this in two ways. First, you look at regulatory posture. Secondly, you look at investor behavior and attitudes. The regulators have leaned towards collective investment schemes being a structure for the retail investor to have access to professionally managed investment schemes from a shared cost point of view. And we're seeing a drive towards this. Secondly, if you look at what's happened in the market in the last few years, there's been a trigger and a change in investor behavior itself, from speculative activity to more long-term activity, hence a demand for collective investment scheme and other investment management products. So what we're seeing in the market is operators are beginning to become aware of this and are tailoring their products in this regard.
The channels for distributing collective investment schemes will multiply. We have started a discussion with the Minister of Information and Communications Technology as to how we can leverage the post office network around the nation. There are other possible channels that we can think about such that we can truly move from the number that we have today of 168,000 unit holders to a much greater figure. The fund management industry has put together a 5-year strategic plan as to how we can move from 168,000 unit holders to 1 million unit holders.
There's been a lot of work by regulators in strengthening the regulatory framework for collective investment scheme, and this is very laudable. We expect this to continue, and we're looking at regulation that has to do with transparency and investor protection. For products like this to blossom in our type of market, there needs to be that confidence that from a regulatory point of view, all the I's are dotted, the T's are crossed. We're seeing the regulators continue to work in this regard based on the new rules that are being developed. We're also seeing an increased enforcement posture also from the regulators. This is very important for confidence in the industry, and we believe it will continue to drive this industry, and we're really happy about this.
With respect to financial markets, innovations are widely defined as the introduction of new products or the production of existing products in a new manner. Following the listing of the first commodity-based ETF in Nigeria in 2011, Damilola Ajayi, Managing Director at Vertiva Fund Managers, tells us that plans are underway to list the first equity-based exchange-traded fund this year.
we're working on ETF initiatives to enable investors have broad market exposure within a convenient and cost-efficient structure. We've all seen what has been happening in the equity market. So what we're looking at is an equity-based ETF that will provide that platform both for domestic and international, investors. And the good thing about ETFs, or the value proposition here, is the convenience and the cost effectiveness of those kind of products. The potential for new products is very huge, and it's largely driven by the demand side, or what I'll call the buy side. There's a lot of appetite out there for new products. So we're going to continue to see, not just from us, but from the market in general, specialized collective investment schemes, ETFs, to ensure that this appetite is, addressed.
Market operators and regulators in Nigeria are also looking for creative ways to unlock the potential of real estate investment trusts, or REITs, which have been bogged down by unfriendly legislation that present bottlenecks and increased costs for real estate investors.
In the 3 key reforms that the SEC has begun to implement this year, one of them is the issue of real estate investment trusts being able to invest in real estate via SPVs, special purpose vehicles. Prior to now, it has been a gray area. And in Nigeria, to invest in real estate, the cheapest and most effective way to invest in real estate is to invest through an SPV, or a special purpose vehicle created for that means, because that materially reduces your costs. For most subscription investors, it's better to buy a property using a special purpose vehicle for a couple of reasons. If you want to transfer or sell that property in the future, all you have to do is transfer or sell that special purpose vehicle. You don't have to go and start registering it afresh. So you save between 10 and 30%, depending on the state you are in. So that is a major cost saver. The second key innovation they put was that real estate investment trusts are now, they've stated clearly that they are asset-backed securities and or mortgage-backed securities. The importance of this is that prior to now, about 2-3 years ago, the federal government and the DMO, in collaboration with the Federal Ministry of Finance, brought out a new rule. And the rule was specific in saying that the bonds, asset-backed securities, corporate and state and local government bonds are all exempt from tax, withholding tax, company income tax. So, but real estate investment trusts were not mentioned specifically. And that has been a small challenge, even though the intention was real estate investment trusts will be also tax exempt, but it was not mentioned specifically. The effect of this rule is that to the extent that that law released by the federal government states asset-backed securities and mortgage-backed securities, right now SEC has come out to say specifically that real estate investment trusts are asset-backed securities. And the third one was the issue of a real estate investment trust can invest through a trust or can hold assets through a trust. Prior to now, if for instance the Sky Shelter Fund wanted to buy an asset and hold an asset, it would have to register its name with the registry that, okay, this property is owned by the Sky Shelter Fund. But right now, you may not need to hold, a REIT may not need to hold it specifically in its name in the final registry. You can hold it in form of a trust. That's massive cost savings. Simply, as I said before, because to do a transfer or to move assets around, you can pay between 10 and 30%. That also brings a whole new group of players into the REITs. So companies that already have a large pool of real estate in different forms and can bring them together in a trust and launch a REIT, thereby improving the liquidity of their assets. So that's a key development in that area.
Such developments reflect the wind of change currently blowing over the Nigerian capital market. This year should see the launch of new products related to Islamic finance, an industry that is projected to grow to $2 trillion worldwide by 2015.
Financial inclusion will be big this year. Islamic finance specifically. Certainly before the end of this first quarter of 2013, we will have approved Sukuk bond rules. A number of the state governments are already waiting to issue Sukuk bonds?
Islamic banking is a new area in Nigeria. I mean, non-interest banking. We are aware that the central bank has already issued licenses to 2 banks, Islamic IBTC being one of them, to actually provide Islamic banking services to Nigerian investors. And the market is already waiting for products to actually allow them to be able to tap into this. A number of issuing houses in Nigeria are already familiarizing themselves with the technicals of Sukuk bonds issuances. We have a number of experts that have participated in Sukuk bond issuances outside of Nigeria that are now residents in Nigeria, and they are helping a number of state governments that are looking at issuing Sukuk bonds. And we think this should be operational perhaps the second quarter of this year.
For any bank, for example, any financial institution in Nigeria, let's say bank, to get a non-interest banking guideline, or rather license, they need to have a technical partner from anywhere, not in the country. Now that builds a relationship, and that kind of relationship means that you're going to be able to do a lot of business together over time. Now, in the same vein, you're going to be having a lot of foreigners now, foreign investors, invest in this new sector because the market is huge. I talked about it the other time. The result concluded in 2012, which was released just, I think, in November. We found out that there are over 30 million adult Nigerians that are willing to have non-interest banking product. That's the biggest market in Africa. There's no doubt about that, even bigger than Egypt.
I actually think, foreign investors all over the world, they follow where they think they're going to make money. Okay, and if they see opportunities in making money in Islamic finance in Nigeria, they're going to follow suit. They're going to just come around and participate. The Gulf states, as we all know, are very wealthy, and they will just look for where they can invest their money. And if Nigeria provides them that opportunity, they're going to come here. So Nigerians, both local investors and foreign investors, will definitely participate in any Sharia compliant investment.
Nigeria's bond market will also receive a boost from changes being introduced to revitalize bond trading on the Nigerian Stock Exchange and to provide an alternative platform for trading of bonds.
The view we have is that this is going to enhance and increase participation in bonds issuances by corporates. Governments will also be encouraged to issue more bonds depending on their expenditure and revenue patterns anyway. But the key thing here is that it's not just the institutional investors that will benefit from the rallying in bond markets. As you're aware, Barclays is going to include Nigeria in its emerging markets index very soon. JP Morgan did the same last year. We're also expecting Citi to include Nigeria in its bond index in a short while. But those that have benefited from this largely have been the institutional investors, the banks, those that have the wherewithal to actually buy in large sums. But what the NSC and the DMO are doing now is to encourage ordinary Nigerians, to also have the ability to approach the stock exchange through their stockbroker, and they will be able to buy retail bonds. They will be able to buy bonds for their portfolios as well. So it's going to increase liquidity. And the key thing there is that the stock exchange is believed to be a transparent, to provide a transparent basis for valuing and pricing bonds. So as we see more activities on the stock exchange for bonds trading, the transparency will be enhanced. I think right now Nigeria is about to experience a transformational shift in the way bonds are traded on the exchange. There is a drive by the Nigerian Stock Exchange and the Debt Management Office of the Presidency to actually ensure that the retail Nigerians actually trade bonds, on a large scale, on a retail basis. And what they've done is to appoint Islamic IBTC stockbrokers as government stockbroker for federal government of Nigerian bonds. The Nigerian Stock Exchange has also followed suit by appointing 6 other brokerage firms to actually act as market makers in corporate and state bonds. The whole idea is to be able to allow investors to have access to bonds on the stock exchange. There's been a lot of concession from the fee angle to allow investors not to be charged so much. So when you're buying bonds on the stock exchange right now, the fees are actually quite reasonable. And it also allows you an opportunity as a retail investor that does not have the minimum sizes that you get in the banking sector of 100 million to buy bonds, to be able to buy bonds for 100,000 naira, a million naira. As little as you can afford, you can actually buy bonds. It is risk-free. You are just bearing the risk of Nigeria. You'll be paid back on maturity, and you can also trade your bonds, which means you can get some yields in between. So it's actually a very good initiative.
We are also trying to push an innovation where a group of small and medium-sized companies can come together and issue a bond, because the size of the bond is also important for investors like the pension funds to invest. A small fund cannot come and issue a 100 million naira bond. You probably, if you have 20 or 30 small or medium firms come together and issue a 10 billion bond, it might look interesting to the market.
After the break, we continue our look at the reforms and developments that will galvanize further growth in Nigeria's capital market, including the introduction of an OTC market for the trading of equities.